In this video, I'm going to discuss the deductions that you can take from your adjusted gross income to get to your taxable income. The IRS allows for the higher of either the standard deduction or the itemized deductions. And the only way you can determine which deduction is higher is you actually have to fill out a Schedule A, which we'll discuss. If you find that the total of your itemized deductions is less than the standard deduction, which in 2019, single was 12,200, married is twice that. This goes up every year by an inflation amount. So let's go through this example that we have in our class notes. Homer and Marge had the following expenditures. Their adjusted gross income was $55,000. They have 3 children that they can claim as dependents, and we're going to go through what can go on their Schedule A as itemized deductions. These first two, not allowed. Those are just personal expenses that are not considered itemized deductions. These next two are an either or. You get to claim the higher of, and as far as in this case, the higher of is the state income tax. And that comes right off, I'm going to show you here, that comes right off a W-2. So when you receive your W-2, the amount that got withheld is your state income tax. This is assuming you don't do, in addition, estimated taxes. All right, as far as this goes, let's go through. We're going to not do the state income tax. We are going to use the we're going to not use the state sales tax, we're going to use the state income tax. But whichever one is the higher is going to go on line 5A, which I'm going to show you right here. It's going to go right here, and it's again the higher of, which is your state income tax. The next item is parking tickets, not allowed. Life insurance premiums are not allowed, and that's why the proceeds, if someone receives the proceeds from an insurance policy, it's not taxable. Real estate and personal property are both allowed, and those are itemized deductions. Those go on lines 5B and 5C. I'll show you here. I'll link the 700 for the real estate, and then the personal property tax is 400. Now the next couple deal with medical expenses. It's a little involved. Yes, they do go on line 1 of your itemized deduction, but you don't get the entire amount. So I'm going to show you how you do that. You get to include here all out of pocket that is not reimbursed related to medical or dental. And what you then have to do is put your adjusted gross income, which in this example was $55,000. That's given in this one. And then all you get is the amount that's over 7.5%. You can either go 0.05 or 7.5%, and then multiply it by your adjusted gross income. So the difference is going to equal the this minus this. However, be careful, if this amount is greater than 7,500, this would be 0. So you got to watch that. You can't, it's not going to reduce your other deductions. That would be unfair. All right, so that takes care of that. Oops. This next one is your interest on your home. Now there's a lot of lines related to mortgage. We'll only be dealing with the interest on it. It goes on line 8A of your Schedule A, and that's one of the main reasons people itemize when you have a high mortgage. Credit card interest on car loans, not allowed. Now gifts are charitable contributions, and that goes under here. I'm going to show you. Now, if it's more than $250, doesn't mean you can't give more than $250. You would just have to list who you're giving those contributions to, and that goes on line 11. Commuting to work is not a itemized deduction. Interest on student loans, that is not an itemized deduction, which is good. It actually is going on your Schedule 1, and that's under the Part 2. And then likewise, the tuition, there's a couple places that can go, but the best is if it goes on Schedule 3. That's in another video. Likewise, the amounts spent for tuition fees and course-related materials, these all can be eligible for a credit. So I have all the amounts on our Schedule A here, so I'm going to start summing things up. So this is the sum of all of these guys, and then this is the sum. And again, I go ahead, it's always good practice with spreadsheets to sum all that's in that area that should be added, so that if you should later add something, it will automatically be updating your totals or subtotals. And then the total equals sum all of these in this whole area. So I'm just going to highlight that whole column. And our itemized deductions are $13,375. So what I do with that then is I will compare it to the standard deduction. And if you look at that, since the standard deduction is greater, I would take my standard deduction and that would go in here. And that brings down your adjusted gross income. If you have your own business, there's a small deduction that you can take, but I'm not going to go through that for this course. And then as far as the taxable income will be your adjusted gross income minus the sum of those two, just goes here. And that's your taxable income. And from there you calculate your tax, which is another video.